How to invest for beginners, starting with 100. Hi, it's Parvaj here, and I'm thrilled to share with you a journey that could transform your financial future. Have you ever held $100 in your hand and dreamed of turning it into $1,000, $10,000, or even $100,000? I know it sounds like a stretch, but that's exactly where I started. And today, I'm a multimillionaire because of the calculated risks I took with my money. Sadly, schools don't teach us how to invest, which makes the whole process feel daunting for beginners. But don't worry, in this video, I'm going to break it down into simple, actionable steps to show you how to invest $100 wisely. Investing isn't about getting rich quick. It's about making smart choices to grow your wealth over time. Everyone has a different comfort level with risk, so I've designed this guide to start with the safest options and gradually move to riskier ones, where the potential rewards are higher. To make this real, I am putting my money where my mouth is. I'll invest 100 in each option and show you exactly how it's done. I'm even going to try something I never thought I'd do, so stick with me. I'm not a financial advisor, just a businessman sharing what's worked for me. My goal is to empower you, not sell you anything. If you find this helpful, please smash that like button. It helps share this knowledge with more people. And consider subscribing to join me on this wealth-building journey. Before we dive into specific investments, I always tell people, the best investment is in yourself. Buy books, take courses, learn new skills. Those pay lifelong dividends. But assuming you've already started that journey, let's explore where you can put your $100 to work. 1. High-interest savings account. Risk 1 out of 10. Let's start with the safest option, a high-interest savings account, which I rate a 1 out of 10 on the risk scale, the lowest possible. In today's economy, finding a savings account with a decent interest rate is tough, but that's not the main reason to choose this. A high-interest savings account is perfect for building an emergency fund, something I believe everyone needs. This is money you can access instantly if life throws you a curveball, like a car repair or medical bill, without falling into debt or paying crazy fees. I learned this lesson early on. When I bought my first apartment, the hot water system broke just 2 months in, costing me a fortune to replace. Thanks to my emergency fund, I avoided a $200 payday loan and the stress that comes with it. Money sitting in a regular bank account loses value due to inflation, so when choosing a savings account, I look for 2 things. A high interest rate. This varies with the economy, but aim for the best available. Instant access. You need to get your money when you need it. Some great options are Ally Bank, Marcus by Goldman Sachs, and Citibank, which consistently offer competitive rates. I have an account with Marcus by Goldman Sachs currently offering 0.7% interest. Not huge, but one of the best out there. So let's do it. I'm depositing $100 into my Marcus account right now. Done. That's the easiest, safest way to start. 2. Gold. Risk 2 pure 10. Next up is gold, often called a safe haven investment, and I give it a 2 out of 10 on the risk scale. Did you know that since the Federal Reserve was created in 1913, the US dollar has lost 95% of its purchasing power? That means $100 back then is worth just $5 in today's terms. Gold, however, holds its value against inflation. If you'd invested $100 in gold in 2000, it would be worth about $580 today. Not because the gold changed, but because the dollar's value has dropped. Gold is a timeless asset. It can't be manufactured and it lasts forever. If you've seen Gold Rush on TV, you know mining it is no easy feat. But why isn't it risk-free? The risk comes from opportunity cost. By tying up your $100 in gold, you might miss out on investments that grow faster. Gold is ideal if you already have wealth and want to protect it, not necessarily grow it rapidly. You can invest in gold 2 ways. Physical gold, buying coins, bars, or jewelry. The downside? Sellers add a markup so you pay more than the gold's true value. Gold ETFs. These are shares in funds that own gold, like the GLD ETF on Robinhood in the USA, or similar options on Trading 212 in the UK. ETFs let you buy and sell at the market value, making it more cost-effective. I'm in the UK, so I'm using Trading 212 to invest $100 in a gold ETF. One click and I'm done. Call me Mr. Goldman. This is a solid, low-risk way to preserve your money's value. 3. Index funds. Risk, 3 per 10. If you're ready for a bit more growth, let's talk about index funds, which I rate a 3 out of 10 on the risk scale. Imagine investing $100 a month in an index fund with a 7% annual return. After 30 years, you'd have $123,000. That's the magic of compound interest. Best of all, you don't need to be a stock market guru to make this work. Index funds are like a bag of Haribo gummies, a mix of the best candies, or in this case, companies in one package. The S&P 500, for example, includes giants like Apple, Microsoft, Amazon, and Facebook, spreading your money across top performers. Warren Buffett, one of the world's richest investors, bet $1 million that an S&P 500 index fund would beat a hand-picked portfolio of hedge funds over 10 years. In 2017, he won that bet, proving that even beginners can outperform Wall Street pros with index funds. To make your money grow even more, protect it from taxes using a Roth IRA in the USA or an ISA in the UK. These containers let your profits grow tax-free, though there's a yearly investment cap, so max it out if you can. My favorite brokers are Fidelity, Charles Schwab, and Vanguard. Let's do it. I'm heading to Vanguard's website, where I already have an account. I'm investing $100 in an S&P 500 index fund, which has averaged a 7% annual return over the past 20 years. Click, and it's done. If you want a deeper dive into index funds, hit that like button, and I'll make a full video on it. 4. Real estate investment trusts, REITs. Risk, 310. Another great option is real estate investment trusts, or REITs, also a 3 out of 10 on the risk scale. Imagine pooling $100 from $3,000 people to buy a $300,000 property. The property generates rent, and you all share the profits. That's a REIT in a nutshell. It lets you invest in income-producing properties like offices, apartments, or shopping centers without owning them outright. It's like owning a piece of the property, maybe the front door, while others own the windows or bricks. Equity REITs earn income through rent and are required by law to distribute 90% of their profits to investors as dividends. In 2019, REIT ETFs had a 10-year average return of 10%, outperforming the S&P 500. In the USA, Vanguard's VGSLX REIT has averaged a 12% return, beating many traditional real estate investments. That's incredible for a beginner. I'm in the UK, so I'm using Trading 212 to invest $100 in a globally diversified REIT, giving me exposure to up-and-coming property markets worldwide. One click, and I'm in. This is a fantastic way to earn passive income with moderate risk. 5. Buying and selling items. Risk, 4 to 10. Now let's get a bit more hands-on with buying and selling items, which I rate a 4 out of 10 on the risk scale, depending on your skill at finding deals. The beauty of this approach is you can focus on items you're passionate about, like collectibles, electronics, or sports gear. Knowledge is power here. Knowing the market can lead to big profits. For example, Pokémon cards are skyrocketing in value. Logan Paul recently bought a Charizard card for over $150,000. I'm interested in radio control model gear and golf equipment, so I know their worth. I found a model engine on Facebook Marketplace for $75, about $100. After negotiating, I bought it for $75, and it came with a model plane as a bonus. I am listing the engine on eBay and the plane on a specialized model flying website to maximize profits by reaching the right buyers. This hands-on approach is exciting and rewarding if you play it smart. 6. Individual stocks. Risk, 6.5 of 10. Things are heating up with individual stocks, which I rate a 6.5 out of 10 on the risk scale. Picking the right companies can be thrilling and profitable, but it's riskier than index funds. During the 1995 dot-com boom, I picked some winning stocks and made a fortune, but when the bubble burst, some companies I held went bust. Timing and luck play a role, but so does fundamental analysis. Studying a company's financials, market, and leadership. Tools like Yahoo Finance make this easier than ever. For fun, I'm testing a theory that random stock picks can outperform experts. I've listed 20 stocks on a board, put on a blindfold, and thrown a dart. It landed on Samsung. So I'm jumping into my brokerage account and investing $100 in Samsung. If you're in the USA, Webull is offering 3 free stocks when you deposit $100. Check the link in the description. Stocks are a step up in risk, but the potential rewards are exciting. 7. Cryptocurrency. Risk 910. Now we're entering speculative territory with cryptocurrency, a 9 out of 10 on the risk scale. Bitcoin, the most popular crypto, has seen wild swings. If you'd invested $100 in Bitcoin in 2015, it'd be worth about $5,000 today, a 5,000% return. But if you'd bought $100 at its 2017 peak, it'd be worth just $17 by 2018. No one can predict its moves, making it a high-risk, high-reward option. Bitcoin uses blockchain technology, isn't government-regulated, and has a fixed supply, making inflation impossible. Other cryptos like Ethereum and Ripple exist, but Bitcoin's the focus here. Only invest money you can afford to lose. I'm using Coinbase, the most popular crypto app, to invest $100 in Bitcoin. If you want to try it, check the Coinbase link below for $10 of free Bitcoin to get started. This is a gamble, but the potential is massive. 8. The lottery. Risk 1010. Finally, we're at the lottery, a full-on gamble, and a 10 out of 10 on the risk scale. I don't recommend this, but I'm including it because 57% of Americans buy at least one ticket yearly. The odds of winning? 1 in 14 million. You're 4,000 times more likely to win an Oscar, yet the sky-high rewards keep people playing. For this video, I'm doing something I never thought I would. Buying $100 worth of scratch cards. Here we go. I'm scratching away, and halfway through, the most I've won is $3 on one ticket. My friend Curtis joins me for a race to see who can win more from the remaining 50 cards. After a lot of scratching, we win back 50, a 50% loss. It was fun, but it is a stark reminder that the lottery is a losing game compared to the other options we've explored. I hope this video has demystified investing and shown you how to start with just $100. From safe bets like savings accounts and gold, to riskier options like stocks and crypto, there's something for every risk tolerance. Skip the lottery and focus on investments that build wealth over time. I've invested $100 in each option to show you how it's done, and I'll follow up in a month to share the results. If you want that part 2, smash the thumbs up button to let me know. Don't click away yet. Subscribe and hit the notification bell so you don't miss the next video. Let's keep growing your wealth together. See you on the other side.